What's up, everybody? Today I thought I would make a video on the path to becoming a successful trader. One thing that I really struggled with when I was trying to become a successful trader was I didn't really know what I needed to do to get better. And there isn't really very many paths out there on how to become good. So this really is, a bit of a basic example of what you can do. What I've tried to accomplish in this video is outline different things that are normally kind of like roadblocks that traders run into and what they can do to overcome them. I've used experiences from my own trading, experiences from some of the traders I've helped improve on their performance over time as well as a performance coach, as well as picking out some really good insights from the likes of S&B Capital and other very successful traders here on YouTube and who I speak to as well. So I hope you find a lot of value in this. Please make sure to leave a like down below if you do find it helpful. Subscribe to the channel. There's plenty more videos out here like this. And yeah, let's get into it. So part one, and I kind of split trading into two parts, strategy and performance. And part one is going to be all about strategy because for me, there's no point being amazing at executing something if you don't actually have a strategy to begin with. So the first thing you really need to ask yourself is, do you have a playbook? And this might seem very basic, but do you have a clear definition of what your edge is? Right? Do you know exactly what you're looking for before you take a trade? Do you have clear definitions of what your entry and your exit is? And this is a very basic first step, but I was shocked at hearing from traders that I've worked with in the past that they've said they haven't really got this down to a T. And if you are in a situation where you go, well, I kind of look for something like this, then what you're doing is you're opening yourself up massively to when you are trying to trade and execute at a high level, you're having to do a lot of thinking under a lot of pressure, and that is normally a recipe for um, pretty horrible trading. So if you don't have a specific playbook, I would actually encourage you to completely stop trading and build it out. If it takes you a week, 2 weeks, it doesn't really matter. Until you have this, you're not going to be able to perform pretty well anyway. Ways you can do this, I suggest go on YouTube, check on here and find people, find traders who are successful, or even if you can't be certain if they're successful, but have a strategy that you like that is similar to yours and see how they do it. You can get ideas from mentors if you are part of a chat room or if you are, um, paying for a newsletter or anything like that. Take the ideas from that and go, okay, how can I put this into a recurring strategy? A big tip here that I took on, which was game changing for me, was look for the easy money trades. Look at charts and go, where was the easy opportunities and how could I have got involved? That's how you build out a playbook. You need to make sure that you have some black and white rules in place for when you have a trade and when you should be getting in and out of that trade. Now, the next step is, do you know your edge and the EV per trade? And this is something that, again, when speaking to a lot of traders, they didn't really understand exactly how important this is and also how profitable they could be. So, do you know the expected win percentage of your edge? Do you know the expected risk reward of your edge? Do you know your expected value per trade? If your answer to any of these questions is no, then you kind of need to begin figuring it out. Now, you need to use backtesting to give yourself at least an idea of this. So you want to get 30, 40, 50, 100 trades, whatever you feel is a good reflection of your edge. And then you can pretty confidently say, okay, over this sample, I think my win percentage would be around about 55 to 60%, and the risk reward I say is 1 to 2. So, okay, now we are beginning to understand what you should be looking for. And then you can compare your results later on and go, well, my win percentage is only 32% and my risk reward is 1 to 1. Okay, well, therefore you're making a lot of mistakes. Are you not letting your winners run? Are you getting out of trades too early? Are you taking too many bad trades? Are you holding on to losers? What is it? But until you know what your edge is, you can't really compare your actual results to the to your edge because you don't know what you're aiming for. Now I'm going to bring over real quick. I don't want to make this too in depth, but I did want to share really quickly um, my EV calculator, and this essentially shows you the potential return of a strategy. So let's say you have that 50% win percentage of a 1 to 2 risk reward. In 50 trades, you're going to return around about 25 times the R. Okay. And what is really important is to understand, as I put over here, that your edge is actually big enough. And when I say 0.5 EV per trade minimum, what I'm saying by that is you want to really be in a situation where if you take two trades, on average, you will return, if traded accurately, 1R. So as you can see here, 50% win percentage and a 1 to 2 risk reward, 25R in 50 trades, that hits that number. The reason you want it to be pretty big, and most people will go, this is a pretty big return. The reason you want it to be that big is if I bring over the accuracy calculator, you can see that if you want to be a profitable trader with a 0.2 R per trade, an EV of 0.2, which would mean that you take 10 trades and you'd return 2R, for you to break even, you would need to be trading an 85% accuracy. Just think about that. You'd need to take 17 out of 20 trades accurately, spot on, performed exactly how your strategy tells you to break even. And that is an incredibly high number. As you can see, I've highlighted here 0.5. For you to break even, you kind of need to be around 70%, which is far more realistic. It's not easy. No, 7 out of 10 good trades is not easy, but it's far more realistic. And as you can see, the area where you're beginning to see some profitability in, in 50 trades, 85% accuracy, you're making 13, 14R. That's pretty good. So you can begin to see that 80, 85% accuracy is going to show you some actual returns at 0.5. That same accuracy level at 0.2, 0.3, it's not good enough. Like, you're not going to be able to profit off of this. So the higher the EV per trade, the better. You can definitely get better than 0.5. You can get 0.6, 0.7. You can probably get higher, but you need to make sure it's at least 0.5. Next step, have you been through gray areas and adjusted? And this is a really big thing, I believe, in trading, where if you have a strategy and you're pretty confident that it works out fairly well, but then you encounter a situation where your edge just doesn't seem to work very well, or you begin questioning, is this a trade or not, then you can't perform well in that situation. So do you still have times where you go, I'm not sure if this is a setup or not? Or do you have times where you're going, this kind of looks like my strategy, but something tells me it isn't, right? If the answer is yes to that, or no to have you adjusted your strategy to accommodate past gray areas, then you need to start tracking them. If you're at the point where you're going, I'm pretty sure I've got a profitable edge, but I keep on making mistakes and I look back and it feels kind of obvious, but I'm not sure, you need to mark those down and you need to maybe adjust some of your trading rules or adjust your trading parameters for certain situations, so that when that gray area comes up, you don't have that I'm not sure if this is a setup or not. Perfect example is, if you're a support and resistance trader, does a previous area of resistance that turns support count in your strategy? You're going to go, I don't know. So go and find out if it does. You need to understand when these gray areas come up, and you need to know what the best response is. There's a lot you can do to improve an edge anyway, where you're going back through and you're going, oh, my edge actually did really well here, so therefore I should probably look at these conditions more favorably. Whereas if you have a gray area and the edge didn't perform very well, you might want to remove it. Now, part two, performance. So at this point, if you've kind of got through those first bits and you've gone, I have my playbook, I know how big my edge is, and I've been trading long enough with this edge that there are very few scenarios and situations that come up that make me go, I'm not sure. If you're at that point, then there's no reason you can't be profitable, right? The scary thing is, I would say that only about a 3/4 of traders, maybe even less, or maybe even more. Sorry, I would say that 3/4 of people out there who trade don't tick all those boxes. So therefore, they don't really know how big their edge is. They don't really know what their edge is. They keep on coming into situations where they're not sure if it is a trade or not. If you got through that, you're in a really good position, but now it all comes down to performance. Number one, are you journaling? Do you know what trade you do your best on? Right? Because sometimes you're going to have situations where you have a really clean setup and you make a lot of money on it, and that's my perfect trade. But if you don't journal it, well, you're not going to be able to learn from that. Do you know where your weaknesses are? Every time I take a bad trade, I can look back and go, is this a weakness I've made before? What can I do to improve on it? Are you tracking mistakes? Are you tracking your execution accuracy? All of these things to essentially see how you're performing. If the answer to that is no, then honestly, why the fuck not? Like, journaling gives you free data and information. It gives you an amazing insight into not just how your edge is performing over time, but how you are performing. You can begin to very quickly find patterns in your own trading as to when you're making mistakes, the thoughts behind those mistakes, and you can learn from them and make quick fixes to them. I think one of the best things you can do is go back through and go, huh, this is interesting. I keep on making this mistake, and I make this mistake because I don't actually know if it's the correct thing to do or not. A big thing that I do, or did, don't do it anywhere near as much now, is I would take profit too early. The reason I would take profit too early was, well, I didn't know if it was better to take it early or let it run to my final target. When I looked back through the data, it turned out it was clearly better to let it run. So that mistake was a very, very easy, quick fix. Now, do you struggle with any fear? And this, I'm not gonna lie, is probably where a lot of people are gonna kind of go, this is me. I wouldn't even worry about this if you haven't achieved the other stages, because quite a lot of the time, fear, whether it's fear of failure, FOMO, fear of losing, a lot of that comes from um, weaknesses in strategy knowledge. So, for example, if you keep on getting FOMO, maybe it's a lack of trust in your strategy, right? Maybe you don't really know if it works or not, and you see a big move, you go, I wish I could take advantage of this. Or maybe you have a fear of losing because, again, you don't trust your strategy because you haven't got the data behind you. So, the first thing you need to do if you do struggle with fear, FOMO, fear of losing, fear of failure, whatever it is, try to resolve it through strategic fixes. You need to look at your data to build trust, maybe to have less gray areas. Essentially, what you want is to have a lot more certainty in this is a good trade and it's therefore easy to take. I don't have FOMO, I don't have fear of failure, I don't have fear of losing because I know it's a legitimate trade. If it's not attached to a strategic weakness, then you probably want to begin using a mental hand history, which is a technique that Jared Tendler uses to resolve long term. If it's, say, for example, related to a fear of losing because you're close to a cash out with a prop firm, then you need to understand the mental game issue in a bit more depth, and you need to actually have a plan to resolve it. I've got videos on that, so if you look through my channel, I've got tons of videos on that, or if not, just look up Mental Hand History Jared Tendler, and you will very quickly find a very good strategy to resolve that. Are you preparing yourself to perform at your best? And this again is something that I wouldn't worry about too much if you're not strategically there yet. This is more, I've got my strategy. I feel like I'm on the precipice, or you're starting to be successful. Are you now doing everything you can to perform at your best? Do you have a set routine before you trade? Do you know what activities affect your performance? And this is a really big one. Is being on Discord for the whole day really distracting? Is watching someone else trade at the same time as you trading really distracting? Or does it benefit you? Right? Could you be doing things that, like watching someone else, it just means that you're not wasting focus on benign price action when you're waiting for your exact setup. And in terms of activities that can affect your performance, do you potentially work out beforehand, and that can have a positive or a negative impact. There have been times in the past where I found that working out has really helped my performance, and then other times where it hasn't. And it's because I've maybe pushed too hard, and then I'm sitting there and I'm a bit too tired, or I'm really achy. So it's finding that balance. And if you don't have a set routine, if you don't know what activities affect performance, start tracking. You know, have a very basic routine, and the basic things that I suggest is set a time for sleep, set a time to wake up, maybe try some very basic exercise like a 30-minute walk, eat low carb food, meditation, right? 5-10 minutes of just peace and quiet just to reset the mind, and then a fundamental preparation. And by fundamental preparation, I mean spend 10-15 minutes on drilling into your mind the most important parts of your strategy. If you think of like a sports player, I'm going to use football or soccer for Americans. Um, before they play a match, they're going to have a set time to sleep. They're going to have a set time to wake up. They're going to make sure they're well rested. they're going to have a warm up, a basic, heart raising exercise. Then they're going to have a period where they do dynamic stretching, so to make sure their body is fully prepared. They will have already had a certain, some players will have just a certain pre-game food that they'll eat. Some will be a little bit more scientific with it. Um, I doubt they'll do a meditation necessarily. There might be some sort of like pump up going on in the dressing room, and then they spend 15, 20 minutes on passing a ball really quickly, quick pass and move activities, quick agility movements. The goalkeepers are going to go off and practice saving shots. It's all about the fundamental preparation. So in trading, that can be, what are you looking for to have a perfect situation? What are you looking for that will tell you you haven't got a trade? Get these things drilled through, maybe go through examples, write them out, record yourself talking about it. And if you do all of this, then you might find that you're preparing yourself to trade better. You need to find what works best for you. Like this routine here that I've put, for some people they'd say, well, the market opens me at 6:30 a.m. so I don't really have time to work out beforehand. Fine, find a way that works for you. Any routine is going to be better than one that isn't. And if after a couple of weeks you go, you know what, I'm finding that on the days that I do wake up an extra half hour early and put a lot of more um, work into doing some sort of workout, or you trade better, make that part of your, like 100% routine. Whereas some people, like I found in the past, that hey, I've woken up 4 hours before the market opens. I live in the UK, so that's like 10:30 a.m. And by the time the market comes around, I'm actually mentally drained a little bit. So for some people, waking up earlier is better. Some people, it's later. You've got to find out what works best for you. And finally, this is a not a super serious slide, ironically. Are you taking this seriously? Okay, and this is a really big question that I ask myself at times in the past. Are you using Sim for fun, or are you using it to actually get better? Are you trading evals if you're trading with prop firms with real care, or are you just being like, oh, it doesn't matter, like this isn't real money, so if I blow this account, it doesn't matter? Do you do things like take very small size on experimental setups, or go, well, I haven't really got a trade today, so I'm going to take this. I'll take 100 shares of this. I'll only risk 10 cents, so I'm not risking that much. And if it goes amazing, I feel really good. And if it's a loss, it's not. Are you doing those sort of things? If yes, you have to ask yourself, do you really want this? And that's just me being kind of brutal. Like, if you're messing around, if you're doing things that aren't benefiting you, just because you're bored, or because like, oh, it doesn't matter, it's a small, then you probably aren't in the right industry. If you are blowing accounts because whatever, if you're taking trades you shouldn't do, but because you're bored, I don't think this is the right place for you. So I hope you found that helpful. I hope you found at least one of those slides really beneficial and impacting and impactful, if I can get my words out, for where you are right now if you're trading. If you liked it, like I said, please leave a like below, subscribe, and I'll see you in the next video.